Today, we have a lot to get to when it comes to the economy and the stock market. You see, there's a lot of cross currents that are really starting to shape up from the last couple of weeks that are starting to affect and impact the markets. Now, we're going to dive into those. We'll dive into a little bit of the portfolio, and then we're going to wrap that up with wealth management and some advanced planning that you can do today. Let's kick it off with number one, economic and stock market risks. There's a lot that is going on right now with respect to the stock markets. You see, economic-wise, no changes really occurred over the last couple of weeks, but there are some dramatic things that are occurring under the surface with respect to not only our economy and stock market, but the ones around the world. You see, we've been talking about this a lot with respect to inflation, and what we're starting to see now are bond yields starting to surge globally. Now, what this is doing is really causing an impact on stocks, and it's all because of inflation. So this is really starting to hurt stocks and bond pricing as well. You see, when the yields go up, bond prices go down. Now, stocks have been doing the exact same thing. So that's one element of it. But then we start to see the fact that we're seeing correlations, the similarities of stocks really starting to pick up because of this volatility. So when we take a look at our stock market, when we take a look at the stock markets around the world, yes, there's a lot of changes starting to happen, and it's really because of some of these inflation expectations that are starting to pick up. Now, we had come into the year with saying that we were going to have rate cuts happening with our Federal Reserve interest rates, but now that's not the case. Now we may actually see that more likely we're not going to do anything this year, or we may even have a hike of our interest rates. And so that's what's really causing this volatility. And the really things to anticipate here is the fact that, yes, we've been talking about this. Yes, it's a heightened time for volatility because of this. But what that is doing now is spreading globally. But then the other element that we are starting to see, and what I've talked about in the last couple of weeks, the geopolitical front. You see, Israel, Iran, the conflicts there have really sent the shockwaves through the economy, through the world, through the markets. And last Saturday, the interception of all of the Iranian drones and missiles and everything that happened was just the start of some of this. And yes, Israel was really successful in some of their defenses, but what this means is that there's a broader and larger retaliation that could happen. Now, that threat is really what we're looking at here, because if that starts to happen, that could bring in other countries, and then that could create a war that may spread just from a little regional into many different areas and facets around the world. So yes, that is where we're starting to see the instability. But there is some stability out there as well. And what we're seeing now is that historical patterns start to emerge. Really, and just speaking of the last number of years, post-World War II, tax day, which was Monday, generally marks the low point of a stock market, and then trends start to pick back up, and we start to see the markets start to go up. Now, that is a trend. That's something that has happened historically, and that may not happen this time. But when we take a look at the seasonality, when we take a look at the global changes that are happening, especially with the industrial and manufacturing cycle that's coming out of this really huge recession that was really not talked about a lot over the last couple of years, now we're starting to see that this could lead to what we call the lead to growth. What that means then is that we have growth of the economy and growth of inflation. And all of that could still potentially mean great news for the future. But yes, there's volatility right now. Yes, we will be watching the Iran-Israel conflict carefully, and we will be making adjustments to the portfolio if that is needed. Number two, portfolio changes. Well, we just talked about the changes that we're seeing with the economy, and we'll make changes to the portfolio if needed. Well, let's talk about those. So let's talk about the investments and the ways that we've been looking at the portfolios. Yes, like we talked about, the bond yields have been surging, so bonds are not a great place to be invested. Yes, we have seen stocks start to come down, but when we start to look at what is still working, gold has been working up to Friday. Now it has been beaten hard, and we need to actually see if it's going to retain its luster or not. And so when we start to see things like that, it's a wait and see. And then with, again, the conflicts, that's another wait and see with any geopolitical type aspects. But what we are witnessing though is the fact that there are some very specific investments that are starting to work well. And we've started to highlight these as well. So when we take a look at some of the things that are working well, we start to see things like commodities that go up with inflation. Metals, whether they are base metals for manufacturing or precious metals, both of those can work very well. Then we start to look at Europe and emerging markets and energy and some of these other sectors. Well, they may be volatile at times, but they're likely to be great places to be to guard against inflation and to take advantage of this new growth that's starting to emerge in economies around the world. So when we see things like that, those are the elements that we start to add into the portfolio. So last week, giving an example, we added a little bit more to Europe, just because of the fact that they are starting to see some of the best growth over the last couple of years. And that could be a great place to see future investments and future gains. Number 3, wealth management and advanced planning. This is the part that we take a look at all the different aspects of what makes a good financial plan. Now, it really comes back down to investments, but more importantly, it comes down to the other advanced planning, such as estate planning, tax strategies, legal advice. See, all of these things go into the steps further of your wealth plan. Now, yes, we don't give legal advice here, but we take a look at the different aspects, what we call wealth transfer. And that is making sure your money goes to the intended people at the right time with the least amount of tax impact. Now, all of this comes back down to what we're going to be talking about today is the continuation of the last couple of weeks. We're talking about taxes. Yes, I know you've probably just filed your taxes, but now we can start to look for this year. And I want to give a couple of different elements of income smoothing strategies. Now, we've already talked about capital gains a little bit, but income is something that is attractional for you, something that you want, something that you need in order to not only maintain your lifestyle, maybe to buy a new house or plane or even a boat. Well, all of these things can be done in a manner that is smoothing the income over time and the tax consequences. So let's take a look at the first one here. Now, this is very similar to the second one, but it's what's called a substantial sale charitable remainder trust. Now, a CRT, the charitable remainder trust, is really a tax efficient strategy that allows you to sell appreciated assets. So think stocks that have huge cap gains, or even stock in your business that you own. And when we set up a CRT, we put the stock into there and then sell afterwards, we can receive that income stream without that taxable event first. Now, what ends up happening here is that the remainder of the trust goes to charity, but you get the income stream for a designated period of time. And this can be a very, very particular, useful element, especially when we have large capital gains. But that brings me to the second element as well, just a retirement charitable trust. So when we're talking about retirement planning in general, we can use the same charitable remainder trust, one that produces a source of income, and one that will go to match some of your charitable inclinations as well. But upon the death, the beneficiary of that retirement account will be the charity. And thus, that may actually alleviate some of the taxes that you may owe on what would be passed to individuals. Now, we talk about a lot the Roth IRA conversion. Now, this is really something that involves moving from your traditional 401k IRA plans into a Roth IRA. Now, what this will do is give you options. And we've talked about this before. There are 3 different places that we can be putting money. In a taxable account, such as a brokerage account, one that pays 1099 capital gains or dividends. But also we have tax deferred like IRAs. But what we're talking about now is a tax-free potential source of income. And if we pay a little tax today, especially before the sunsetting of the Tax Cut and Jobs Act, well, then now we may actually have the ability to put more money away into a tax-free structure than what we had initially thought. So when we take a look at that, that may set yourself up better for higher brackets in the future. Well, another element then, let's take a look at oil and gas investments. Now, this is not for everyone, I completely understand, but when we take a look at the income producing opportunities here, especially since the fact that this is a volatile sector, we want to take a look at those income that it produces, but then also the ways that we can be possibly receiving less in tax because there may be more of a return of capital. So if that's something that is appealing to you, there may be great opportunities with different types of energy that's tax efficient. Let's talk about one other element. Well, we have what's called installment sales. This can be done with your business and the sale of your business, but it can also be done with assets that would produce capital gains as well. And a 2-year installment sale, let's say for just what you want to sell stock, may be a great planning technique. You see, if we spread the sale over 2 years, this will reduce your capital gains in any 1 year. Now, that's the great news. Obviously, there is risk that the stock may go down in price. So you have to work with each one, make sure that you have the correct taxes and the fact that you're working with your CPA just correctly in that respect. Now, we talk about others like non-qualified tax-deferred annuities. Now, this may be a great way then that you can actually postpone taking income, have the assets grow without tax at that point, but only pay tax on what you take in the future. So it would be taking a taxable account and actually turning it into something for retirement. So this again may be a great way for you to avoid some of the tax today. Well, then we can also talk about different elements that we do planning with here as well, and that may be taking a loan from, say, your life insurance. And if we do this correctly, that may be a great way to have income. But certain, life insurance type of companies themselves may reduce your death benefit. So there again are negatives to this, but it may be to your benefit. So there's a lot of opportunities to smooth your income over time. Number 4, our second opinion service. We've highlighted this a lot. You know, when we talk about a second opinions, or what we call a stress test, we take a look at where you're at today and where you want to go in the future, and see if there are any gaps that exist. Now, what this will do is either for you or for someone that you deeply care about, it will help provide a peace of mind, knowing that we are on a path that is going to hopefully set you up better tomorrow than you are today. But that's where going through the second opinion is going to be really vital, because when we take a look at where you're at, then we can start to put a plan in place to know where you want to go and how to get there. That is the power of a stress test as part of the second opinion service. So please feel free to reach out. We'd be happy to set up a time. And you know what? With everything that we talked about with income, with all of the different aspects of the changes of the portfolio, with the changes of the stock market, there's a lot there. And that's why this may be a great time to go through a second opinion and have adjustments to be made so that you can be prepared for the future. Take care.